Imagine a world where you can harness the power of your intellect and knowledge to reach new heights. A world where you are a beacon of wisdom and a catalyst for change. This world exists, and it's right here. Welcome to the pulsating world of Asian stock markets, where every twist and turn presents a new opportunity for growth, resilience, and strategic caution. The recent performance data paints an intriguing picture. From the shores of New Zealand to the bustling markets of Hong Kong, the indices tell a tale of optimism tempered with strategic caution. The Nikkei 225, for instance, surged by 1.92%, while the Indian market enjoyed a healthy uptick of 1.72%. On the other hand, markets such as South Korea, Taiwan, and several others face slight declines, reminding us that the world of investment is as unpredictable as it is rewarding. In the grand scheme of things, the general trend across Asian markets is positive. However, the devil is always in the details. To truly understand the forces at play, one must delve deeper. A comprehensive investment analysis would consider factors such as sector performance, currency risk, and the political and economic stability of each region, among other things. It would also keep a keen eye on global economic indicators such as oil prices, interest rate movements, and international trade developments. While a full 3,000-word report might not be feasible here, this brief overview offers a snapshot of the current market conditions. It serves as a starting point, a foundation upon which a more detailed analysis can be built. In the world of investments, knowledge is power. The more informed you are, the better your decisions. This is why it's essential to keep abreast of market trends, understand the underlying forces at play, and always be ready to adapt your strategy to changing circumstances. Remember, the journey of 1,000 miles begins with a single step. Today, you've taken that step. As you continue your journey in the world of investments, may you find the wisdom to make the right decisions, the courage to take calculated risks, and the resilience to weather any storm. This is the essence of investment, the art of turning knowledge into power and power into success.
Have you ever wondered what's been happening in the stock markets of Europe and Africa? Well, wonder no more. Let's delve into the current trends and movements. In recent times, the Dow Jones Europe 50 and the UK stock market have experienced notable increments, suggesting a bullish outlook and a boost in investor confidence in these regions. On the other hand, a bearish trend is evident in the Russian and Turkish indices, potentially indicating regional market uncertainties or a cautious stance by investors. On a closer look, the Dow Jones Europe 50 index rose modestly by 16.28 points, marking a 0.33% increase. This steady uptick signals a positive sentiment among investors. Similarly, the UK stock market rose by 52.48 points, equivalent to a 0.69% increase, indicating a strong market activity. However, not all European indices are experiencing growth. The German stock market remained stable with an almost negligible change of negative 0.07 points. The Russian index decreased by 5.26 points, a decline of 0.47%, which could be attributed to geopolitical tensions influencing investor confidence. The Turkish market also experienced a significant drop of 96.54 points, or a 1.05% fall, reflecting potential internal or external economic pressures. Turning our attention to Africa, the South African market, despite a minor decrease of 0.02%, maintains a sizable index suggesting underlying strength. However, indices experiencing declines, such as Turkey, warrant caution and a potential hold-or-sell strategy to mitigate risk. In conclusion, the European and African markets are currently exhibiting a mix of growth and volatility. The data suggests a strategic approach focusing on the European markets for growth potential, with a cautious perspective on the more volatile African indices. Investors are advised to closely monitor these regions, taking into account the broader economic indicators and geopolitical events which could impact future performance. Remember, a well-informed investor is a successful investor.
What's the pulse of the investment climate in the Americas today? The scene is buzzing with an undeniable enthusiasm. The spotlight shines brightly on the technology sector and precious metals, both putting on a stellar performance. Yet, as seasoned investors know, it's crucial to keep an eye on the emerging market indices for any hint of volatility. The name of the game? Balance. Consider both sectoral trends and geographical diversification when making decisions. The bullish outlook continues to dominate the atmosphere. Indices like Nasdaq are hot tickets, especially if the tech sector keeps up its momentum. Precious metals indices are also seeing a significant uptick. They're a good buy, particularly for those looking to diversify their portfolios and hedge against potential market corrections. But what about the performance across geographical areas? Canadian and Brazilian markets have been flexing their muscles, showing healthy increases of 1.04% and 0.42% respectively. These markets could add a splash of geographic diversity to investment portfolios. The Argentine market, on the other hand, is showing a sharp increase of 2.17%. While this could signal a buying opportunity, tread carefully and consider the broader economic context. Venezuelan and Peruvian markets have taken a hit, indicating potential instability or adverse economic factors. A cautious approach with a hold or sell strategy may be prudent here. The MSCI index data paints a varied picture of performance across global markets. The World Index and AC World Index have shown promising year-to-date gains, reflecting an upswing in market sentiment. Meanwhile, regions like the frontier markets and the Philippines Index have outperformed, suggesting growth in selected emerging markets. On the flip side, areas such as the Greater China Index and Latin America have faced challenges, with the Thai Index experiencing the steepest decline year-to-date. So what's the bottom line? Given the World Index's year-to-date performance, a strategy favoring globally diversified portfolios may continue to offer stability and growth potential. Selective investment in emerging markets like the frontier markets and the Philippines Index could provide attractive returns. But remember, careful selection is key, given the mixed performance across emerging markets. The decline of the Greater China Index suggests a cautious approach to this region until clearer signals emerge. The message is clear: keep a finger on the pulse, monitor closely, and adapt strategies as necessary. It's an exciting time to be an investor in the Americas.
Have you ever contemplated how our actions today mold the future? How the choices we make or the decisions we avoid will ultimately become the chapters of tomorrow. Welcome to a world where the ancient wisdom of the Yi-Jing intertwines with modern finance and investment. The Yi-Jing, or Book of Changes, is an ancient Chinese text from over 3,000 years ago. It's a complex system of binary arithmetic, represented as a series of hexagrams. These hexagrams, a set of 6 lines, either broken or unbroken, represent the yin and yang of the universe. They are a symbolic language, a cosmic code that can provide insights into the ever-changing world we inhabit. But how does an ancient text relate to market trends? The Yi-Jing provides a roadmap, a guide to navigate the complex terrains of the market. It's akin to a compass that points the way, helping investors anticipate market trends and make strategic decisions. You see, markets are like a hot air balloon caught in a gusty wind that can rise sharply only to hit an air pocket and descend just as quickly. The recent rally in markets is a testament to this. The markets, much like the balloon, can't have it both ways. They can enjoy the fruits of a hot economy while also expecting rate cuts. The Yi-Jing hexagram Li Wei Huo is a perfect example of this. It symbolizes fire and its transformative power. It's a reminder that even in the midst of a hot economy, there are hidden risks, much like a fire's potential to burn. This symbolism can be applied to the current economic scenario, where resilient economic growth has led to a bearish outlook for risk perceived as such. Our channel has been a pioneer in using the Yi-Jing for economic analysis. Our inaugural series of timeless wisdom videos delved into the hexagram Shui Feng Jing, a metaphor for the Chinese economic landscape. It highlighted the importance of understanding the depth and complexity of the market, as well as the need for strategic foresight. Similarly, we've used the Yi-Jing to predict geopolitical events. Our video Storm, Geopolitics and Money foresaw the conflict between Israel and Hamas and the subsequent impact on the Gaza region. We also predicted the disruption of the fastest trade route between Europe and Asia due to attacks by Houthi militants from Yemen. In essence, the Yi-Jing provides a unique lens to view the world. It's not just an ancient text, but a relevant tool for understanding modern economic challenges and investment strategies. By interpreting the global political and economic situation through the hexagrams of the Yi-Jing and analyzing the results through AI tools such as neural networks, our channel offers unique investment strategies. In conclusion, the Yi-Jing is a testament to the timeless wisdom of the ancients. It's a tool that can provide profound insights into the future, helping us navigate the tumultuous seas of the market. It's a reminder that our actions today will become the future. So, as we continue to shape our tomorrow, let's remember the wisdom of the Yi-Jing. Thank you for joining us on this journey. Stay tuned for more insights and analysis